Morning, guys. Just a quick video for everyone in regards to Solution Builder. I'm finding that a few advisors are still struggling with how to use the platform. So today I just want to share the Solution Builder website with you, run through it for making a recommendation for a client and building a multi-plan, and then also income protection. So short and sweet. I'll send it out. You'll be watching it now by YouTube, and any questions, you know where I am. So I'm just going to share my screen. And I'm gonna find, here we go. It should be nice and prepared for you today. Here we go. So, Solution Builder. Naturally, you're going to log into our pipeline. And then when you get into the platform, you've got an option of Solution Builder, a Show Web, and the bottom one, I don't even know what that is, if I'm honest. So you launch Solution Builder. And the first thing you're going to do on the right hand side, you're going to add your client. So if it's a single client, you'll add that. You'll add an additional client. So I'll show you where to do that. So basic details. Mr. Test. 1st of the 1st, 1975. We'll say he's a male non-smoker. For the purpose of Solution Builder in your quotes, it doesn't really matter about the height and weight, but you do need to put something in. So I tend to just throw in an average. And we'll say they are employed. This is important. You know, if you don't put the income in correctly, when it comes to an income protection recommendation, you can't get the right benefit per month. So make sure you get that right. It doesn't have to be to the penny, but make sure it's enough so it's sufficient to meet the monthly benefit you need. And we'll say this client is an accountant. So we can say joint. I'll add another client on for the sake of it today. Mrs. Tester, and we'll give her a date of birth, 1976. Non-smoker again. We're going to put her in as, she's not 9 foot. We're going to put her in as 5'2", and I'm going to put her as 9 stone. I will also say she's employed. Let's say she's a hairdresser. No, we won't say she's an hairdresser. We will say she earns £35,000 a year. Hairdresser. Shop manager. We'll go for that one. So you save the client on the right hand side. Now you've got your profile to be able to use to build the recommendation. So naturally, this is for, as you can see at the top, Mr. and Mrs. Now we're going to add in the covers. So, you know, as a multi-benefit policy, if a client's got a mortgage, your first priority is usually to protect the debt. So naturally, if it's a repayment mortgage, you can use the increasing tab. If it's an interest-only mortgage, you use the level tab, and it's as simple as that. So we'll say this client's got a mortgage, and I'm going to say it's a repayment mortgage as standard. So we're going to do a joint protection policy, because naturally, if they've got a joint mortgage, they need a joint plan. They need one policy to protect one mortgage. So don't do 2 single plans. Compliance will just jump all over you. So exclude low start plans. Yes, we don't want any of the easy routes. And we always want premiums to be guaranteed. Mortgage term, let's keep it simple, 25 years. And for the clients, this is going to be life only. 250,000. So straight away on the right hand side, you can see there's an indicative quote. Gives you an idea of kind of what that's going to cost. So let's say you knew your clients could pay a couple £100 a month. You might want to untick that, put some critical illness cover in, give it as an example there. And as you tab out, we'll say TPD, yes, waiver, we'll say for both of them, and fracture cover, I don't tend to add that. And then the policy interest rate, something to really think about at the moment is, you know, interest rates are rising. So this reflects the mortgage rate. So if the mortgage rate is below 8%, it means the policy is always in credit as it falls. So we usually put 6 there. In the current climate, I'd probably be leaving it at 8. So as you can see on the right hand side now, 224 quid to protect life or early critical illness cover. And a quick one here, never tick this one. That is standalone critical illness cover. We don't do it because you have to survive for 14 days for that to pay out. So why would you not? You're going to do life or earlier critical illness, or you're going to do life cover. So again, for the purpose of this, we'll say it's a £200,000 mortgage over 25 years, life cover only, waiver of premium, and we are going to remove the TPD because total permanent disability is just for critical illness cover. So save the benefit, nice and easy, quote now on the right hand side, and you will get your comparison list. So it always goes in order of the most cost effective. And what you'll say is, of course, life insurance. It does what it says on the tin. So as you can see, Scottish Widows are offering a policy at 32.48. Now, if you click the word alternatives here, ignore that, click the word alternatives, it'll open up and it'll give you a list of the providers that are quoting for this policy. So again, life insurance does what it says on the tin. You might want to give them an AIG plan, which is 35.07, because you want them to have smart health. If that is the case, press select, and it will now bring AIG as the top recommendation. So here, you've got 3 little lines. That's where you're going to access your comparison report. That's really important to have that done, and have it done dated on the date of your quotation or prior. Never after, because you have to evidence that your comparison was done, your research was done before the recommendation was made. So the comparison report you'll see there, and then click quote details, and it'll open another tab, which I'm not sure if you can see on the Zoom here, but let's have a quick look if you can. Yeah, I think you can. So with regards to the quotation, you click here on quote details, you'll get the illustration, you'll get the key features, get everything into your folder nice and ready. So that's for mortgage protection alone. But let's say we wanted to add, I don't know, a year's salary over and above for life and critical illness. So let's get back to the other page. Let's click on the report button here. And you can see that the policy is in there as a single plan. So what we're going to do, we're going to add a level cover. Now what we're going to do is we're going to do it for the first life, because this is personal protection, family protection. It's not going to be over the mortgage term. It's going to be up until retirement. I'm going to say 68. Life and critical illness. Annual salary. Because it's critical illness, we're including TPD. We're going to include the waiver for the first life, because it's his policy. And then indexation. If you're doing personal or family protection, index it. They'll benefit from the effects of inflation. And month to month, they get to benefit from the increase that may require to have that impact of the cost of living. So it's optional every 12 months on their anniversary, whether we want to take it or not. The thing to notice is that it doesn't cost anything to add it in, but if you don't add it in, you can never have it. If you do choose to not have it on your anniversary, it will be removed, so you don't get future years. So add that policy on. You've now got life and critical illness over and above the mortgage debt. I'm going to do the same for the missus. Level term, second life this time, really important. Exclude. I'm going to do 68. We're going to do her annual salary, which was 35,000. Disability cover, waiver now for the second life, and indexation, save it. So you've built a multi-policy now within Solution Builder, so you need to quote it. So the policy first covers the mortgage debt on a joint basis. It gives you a level cover over and above for Mr. for life and critical illness. It does the same for Mrs. life and critical illness for a year's salary. So let's click that quote button now. So just to recap, that is life or life and critical illness. You're building a multi-plan within Solution Builder. Nice and easy. And the same applies now. When it drags in as a multi-policy, click alternatives. Because this is now critical illness cover, it's about quality. It's about what's best fit for the customer. So Legal in General are coming out at 103.89. Is LV something you want to recommend? AIG, we talked about smart health. Do you want to add global treatment? If you do, you need to go direct and do that. But for the purpose of your comparison report, you could select this and use this recommendation. And then the list goes on. Something you'll notice as well as the list goes on is the enhancement style plans. So the ones at the top will always be standard. So it becomes more expensive the bigger quality and better quality you need. So let's use the AIG as an example. This is core cover. Core cover means standard. If we come right down, we can now see the core cover plus children's, next step if they've got kids, or the enhanced cover, and enhanced cover with no children's critical illness, or the top policy with AIG. Of course, for a client with children, that's what you want to be using, enhanced critical illness cover, and I'm going to select that one because it's got the kids cover on as well. So it now brings that in. That's my selection. I'm going to save my comparison report. I'm going to go to quote details. I'm going to save my illustration and my key features. It's that easy. If you want to make any amendments to the quote, simply press requote. You then go in to this little button here. If you want to remove anything, press the bin, delete it. And you can also use this to change the cover levels very easily. So for example, if I click that, we're asking for 50,000. Let's just move it up to, actually, let's move it up to 62.5. Let's keep going. Will it let me? No, it won't. It just allows you to use a sliding scale rather than going in. If I'm honest with you, I don't tend to use that sliding scale. I'd use the edit button and I'd say, my client now wants 2 years salary, save the benefit, requote, and now he gets 2 years salary. Of course, his wife is still on 1. So we would then look towards the panel coming in. It goes back to the most cost effective. Click alternatives on the left. Choose your recommendation, which is AIG. And now your illustration will reflect the change. So requote that, come back. That is a multi-benefit policy on the Solution Builder. If you haven't got a mortgage, delete. Don't protect the mortgage. Just work with the level sum assureds. You never use a decreasing plan if you haven't got a mortgage, you're not protecting a mortgage. If you have got a mortgage, yes, add it in. If you haven't, work on lump sums or multiples of salary up until retirement. So that's multi-plans for you. That's life, that's critical illness cover. If you were looking to kind of think, well, who do I put my covers to? It's personal preference to you as the advisor. It's your choice. There's no right, there's no wrong. You've got to meet the need of the client. So consider, their lifestyle, their concerns, their family setup, if they've got children. And also, is smart health going to be advantageous to them? Is global treatment going to be good for them? Is the Guardian Halo plan going to be something you want to discuss with your clients? If it is, quick quote, get them the recommendation that's best for your customer. Based on your choice of provider, again, alternatives, or look to who you want to recommend, pick the right provider, and they will come down on the list for you. So you can see with regards to your options, there's many options there. You're the advisor, you make the decisions. When it comes to picking the right one and you want to apply for it, the final thing, let's say we did go with that enhanced, there it is, AIG plan. It's as simple as clicking the orange button, press apply, and it will take me to the right provider to then log in. It'll drag in the information. You don't have to rekey it all in again to the provider. And I'm not going to do that now. It'll drag it in. You can complete the application, post demands and needs. Remember that. So you want to package your case first, and then you want to go to do the application once your case managers have sent the demands and needs to you and to confirm it's right and sent to the client. That's now the court process. So I'm going to click requote. Refresh, let's start again. We're now talking income protection. So let's delete these. The reason I don't do it as a multi-plan is because income protection, I believe, is better with the British Friendlies of the world, Cirencester, especially the Exeter at the minute. They're extremely cost effective. And of course, the other providers do offer, guaranteed premiums, not age costed premiums such as Aviva, AIG. So it depends on what's right for your client. But I never do personally, this is might be wrong. It's just how I work. I never do an income protection comparison report with my life and my critical illness. I do it separate. It just keeps it away from the confusion of it all. So now income protection, all you're gonna do is click the income protection tab. Nice and easy. I'm gonna do it for the first life or the second life. You can have a joint income protection plan. So you've got to do it for the first life on this one. We're gonna do it to the age 68. Include limited benefit payment period. This means, do you want quoting for policies that pay out for 12 months, 2 years, 5 years, 10 years, and full-term plan? Do you want the options? Well, personally, I believe but it should always quote for full term. And this is important. When you recommend and make an advised sale for a limited, say a 2-year payout plan, you still have to evidence an illustration for a full term as an example within your folder. So at the minute, I'm always going to start and ski downhill. So I'm going to say no there. I want a full term plan for my clients. We want a monthly benefit. You can have the maximum, but let's just do it based on what we say so. Include dual deferments. That basically means that if you want £1,000 after 3 months and £2,000 after 6 months, you can do that, but let's not confuse the matter at the moment. So the monthly benefit, we'll say for this client, he needs £1,500 a month to cover his mortgage costs and his cost of living. He needs it for 1 month. He only gets 1 month sick pay, and we always index. Gives you more commission as well. Not that that's the reason, look after your clients, but at the same time, you want to be making sure that it does benefit from the effects of inflation. So if I save that cover, there's a cover for Mr. Quote now. You'll get your comparison report, same as you did on the previous offering, and you can see that it's based on a reviewable premium. So if we go into alternatives, you can see that the guaranteed premium with Holloway is $57.58. The reviewable premium is $53.89. They're the most cost effective for what you're looking to get on the market. Now I'm just going to come back. And the reason I'm going to come back is I'm going to requote to edit. Click on this button here to edit. And you can see there, reviewable or guaranteed premiums. Always put guaranteed. Because age costed is still guaranteed. Guaranteed means that even if it's age costed, it's guaranteed to be a certain amount extra every month as they get older. Reviewable means it's in the control of the provider to increase the premiums year on year out. So that's not good. So we'll go guaranteed. I'm just going to requote that again. Holloway will come out top at $57.58. And to be honest with you, why would I not go with them? Income protection does exactly what it says on the tin. It pays out if you're off work for reasons of accident, sickness, disability, critical illnesses, whatever it may be. It gives you that monthly benefit. So the Holloway plan really is what I should pick. Unless you're using a feature that comes with Cirencester, British Friendly, the Exeter that you want the clients to benefit from, then you wouldn't really go down the list. So Holloway's the top one. Let's come back. Same as previously, the 3 lines here. Click that, save your comparison report, get your quote details, and then when you're ready, click apply to go through. So requote again. I'm going to bin it off. Done my misters now. And I'm just going to have one more for my second client. Guaranteed once again. Don't want it to be limited. And we're going to give her £1,000 a month. 1 month deferment, she gets paid sick pay for a month. Save the benefit, and let's requote it. Holloway coming out top once again. As you can see, we've now done it on guarantees, so then reviewables aren't coming in. 38.24 for my client. Happy days. Back we come. Click on the 3. You get your comparison report for your file. You get your quote details. And I'll click that. So you can see you get the key features for the plan. Make sure it's the guaranteed one. And also I can see illustrations now come in. So when you click the illustration, it will open. That's what you can give to your client. So solution builder, it's that easy. What I would recommend everybody does is practice your trade. You should be able to do a recommendation on solution builder on the spot with a client. So create dummy cases, make them up, Mickey Mouse, David Beckham, whoever it needs to be, Angelina Jolie, it doesn't matter. Think of celebrities, think of cartoon characters, give them mortgage balances, give them incomes, give them retirement ages, case study yourself. And every morning before you start your day, get on and do some recommendations to put yourself in the mindset of building recommendations for clients, because everyone's circumstances are different. So it's important to tailor it right to your client. And of course, give them the recommendation you need. I'm not going to go into anything further with regards to other products today on here. It's short and sweet, very basic, but decreasing mortgage protection, level, family protection, income protection speaks for itself, and naturally, whole of life, family income benefit. If you do want to quote that, I always quote that separate, just like I did with the income protection. So, hope you enjoyed it. Cheers for your time, and see you in the next video.